All right,
Hey
recording.
Ben,
Every
did you
little
see
last
that?
bit out.
Ben, did you see that
Hold on,
lady?
we're doing recording. Let's cool it.
Yeah, I'm recording now.
All right, cool. All right, guys. Carrying on with our Wednesday meets where we kind of dive into a topic or topics. I don't know that today's topic will like fill a whole meet. I don't think it's very hard to understand. So I got a couple other things we can cover too, if it doesn't take up the whole time. But we're going to start with something that's been in the news lately, that's on a lot of investors and traders' minds and pops up from time to time. That is Japan, carry trade, interest rates. It's not super exciting stuff, but it's stuff that as investors or as traders, we should probably know about. So that's what the topic is. So now it's everyone's job in here tonight to get educated about this topic together. Remember, this is not a Ben lecture, though I will steer the conversation. So I think if we're going to talk about Japan and carry trade, we need to first define what even a carry trade is. So I think that's where we start. So everyone get to Google in, everyone get to Chat GPT in, to Grok in, and I want someone to explain to me what a carry trade is. I'm not talking Japan specific here. Just I want someone to tell me what a carry trade is. Maybe somebody knows. Maybe somebody in here knows, doesn't have to look it up.
Might take a stab at it, and then we could
Go
probably
ahead.
get deeper. Essentially, it's basically when you're borrowing an asset from one country and converting it, you're carrying it over into another asset, and then you're basically exploiting like the interest rates, and you're using that money into a different country. So like it's like for example, people would borrow yen because there's low interest rates, almost to no interest rates over the last couple of years. They would take that money, convert it into dollars. That's why you would see a lot of like the JPY, USDT, you know, moving back and forth a lot during those times. And then they would invest it into the US market. So it's kind of like, but yeah, that's just kind of like the gist I got from it.
Yeah, I think you're dead on. So a carry trade, it's a strategy, right? It's an edge that certain investors have where someone borrows money in a currency with a low interest rate and uses those funds to invest in a currency or asset that offers a higher return, right? So you're earning the difference between the two rates. And that's where the carry comes into play, right? So profit comes from the interest rate difference. That's what the carry is of the carry trade, right? So essentially, you're borrowing low and you're investing high. That's what a carry trade. That's like the simple definition, right? So if borrowing costs have been near zero in Japan for decades, right? But if an investment in the US or the UK or Germany or something yields 4 to 10% or whatever, then the trader earns that spread minus, commissions and costs and on all that stuff. So yeah, 100%. Um, so why, right? So why does that work? What are the ingredients for a carry trade in order to happen? Um, I don't know if you guys want me to answer it or if you just someone wants to try to answer it.
Does the state of the economy of the state, in this case of Japan, has anything to do? Like
Yep. So
their
what?
GDP?
So let me ask the question a different way. Why does it work? Right. So what are the ingredients? So you're right. Right. So number one, the first ingredient in a carry trade is low cost funding currency, and that's what it is. Right. So it's often a country with an ultra low interest rate, which has been Japan. Right. Historically the yen was near zero. But there's other low rate currencies too, the Swiss franc, and actually sometimes the US dollar when rates fall, like relative to others, right? People will get into the dollar and then spread it around elsewhere. So yeah, that's definitely one ingredient, right? So the first ingredient is low cost currency, right? Historically, Japan's been near zero. And then obviously, what's the other side of that? Like, in order for that to work, you need to invest where? Anybody.
in higher yielding assets.
Exactly.
Yeah.
Right.
I mean,
It wasn't a trick question. You know, they're those funds that get borrowed from like Japan or Swiss, or I guess sometimes the US. You're either buying, you can buy whatever, right? Higher yield currencies, higher yield assets like bonds or interest, whatever it is interest bearing. Sometimes they buy risk assets, but it's actually not as common as like safer assets. It's already risky borrowing another country's currency, right? That's already a giant risk. So people who do this, people who have a lot of money, they're not like stacking risk. Does that make sense? Now they do sometimes, right? They'll do stocks, they'll do even debt, or even sometimes probably crypto yield products. Maybe not so much this year, but probably in 2021 if the yields are above borrowing cost, right? So again, the two ingredients so far: low cost funding currency, higher return destination. Now, number three, all right, this works best when there's stable expectations. So these traders who perpetrate these carry trades know that it works best when the funding currency is stable or weakening. Why? Because if I borrow money from Japan and the currency gets weaker and weaker, guess what happens when I have to pay that money back?
Have to pay more.
not worth as
Less.
much.
Pay
Yeah.
less.
No, I
Oh,
have to
less.
pay less, right?
Oh,
So
yeah.
I borrow $1 million from Japan, and then their currency, I have to pay it back 2 years later or whatever it is, right? And then 2 years later, that currency is less. All of a sudden, now I'm making more money on that trade. Does that make sense?
Yeah, it
Yeah.
happens when you do the conversion from whatever the
Yeah.
whatever the other currency is.
Yeah.
Yeah, it's like, dude, forex is crazy. Like, all rolls into this kind of stuff. It's a whole nother world.
Yeah, it is. It is. So again, right? So number one, low cost funding. Number two, higher return destination. Number three, stable expectations. Carry trades work best when the funding currency is either stable or weakening. So repaying it back is cheap or cheaper. And
I
this
got a
also,
question.
yeah.
All right, so generally, like carry trades are like with big hedge funds, big money. So if everybody is, we'll say Japan for it, since everybody, that's the thing. You get Japan, you automatically basically you're selling that Japan. So it's not like shorting it. So when that also keep the I'm gonna say price down, but make it worse. Am I saying this right? If I'm shorting it, that means the price or the value of that asset will be low too. Correct?
So if you're like shorting Japan's currency on forex, is that what you mean, or something?
Now I guess when I think of carry trading, I was trying to visualize it. So just like back in the day with when Ave was on Polygon, how they was paying you to deposit an asset, and then they was also paying you to borrow. So what you would do is, you would borrow the asset and then sell it. So if you sell it, you in a sense shorten it because you're buying it back at a lower price.
So I think I understand the question correctly. And if I do understand the question correctly, then like you're asking, do carry trades put downward pressure on the currency, right? That's being used or borrowed?
Therefore,
Yeah. Okay. So I think the short answer is yeah, why wouldn't it, right? So when traders, like if I'm thinking about it like this, right? So when traders do a carry trade, they borrow in that low interest currency, right? And immediately sell that currency. That's what they're doing, right? So they're buying and then immediately selling to buy a higher yield one, whatever that is, right? USD, AUD, Great British Pound, whatever it is. And I think it's a repeated selling process, right? That increases the supply. So I would say, yeah, why wouldn't it put downward pressure on a currency? So that makes sense. Yeah.
So, and if everybody's doing it, then that keeps it down, and I guess that's what makes it work.
Yeah. 100%. Carry trade also works best when markets are risk on and it's like low volatile. If everything's like blowing up, carry trades aren't the best thing to be in. So talking not exactly what Bosco was talking about, but like who does carry trades, right? He mentioned like it's not me and you, right? Like I'm not doing carry trades. I don't know. Like I don't know that. Like I think he just like when I think about it, like you got to have a lot of money, right, to make it worth it. These are hedge funds, right? These are banks and institutional investors. These are like sovereign wealth funds and pension funds and I guess I don't know. Maybe does retail do carry trades? Maybe they do. I don't know why I said they don't. Guess we can look it up. I guess they do. Yes, retail traders absolutely engage in carry trades, especially in the forex market, by exploiting interest rate differentials between currencies.
They do, but their volume is less than 10%, right?
Yeah, so it's I guess forex is exploiting carry trades, right? Like forex trading is ultimately like if you're trading USD to JPY or AUD to JPY, I mean you're exploiting a portion of carry trade.
Yeah, it's just they're not investing in long term in an additional asset. It's just
Right. They're not taking billions of dollars and actually it's different. So they're doing it, but it's a little bit different. They're not actually going to Japan, going to a bank, borrowing money, bringing it over here, and then selling it and buying the assets. They're just exploiting the differences between the actual nominal value of their currency.
Kind of related, but mostly unrelated. The gray area of the forex market is much larger than the gray area of crypto. It's a whole nother rabbit hole.
What do you mean?
They're mostly trading synthetics, right? So they're trading things that don't exist.
There would probably be like no modern day crypto and alt trading like we have without forex. Like it.
Correct. I agree.
Yeah.
It all started synthetically.
Yeah.
So just like just to further answer your question there, just like Sol came out with all these pegged assets to the stock market, right? Apple and Nvidia and AMD and all that stuff. It's the same kind of thing, just synthetic pegs.
And all the prop firms, right? That all started in forex. Most of your like ICT, SMC, a lot of that shit started in forex. Those are all like old school forex stuff, right? They just took old school forex names and renamed them. Single prints became fair value gaps, stuff like that. So what's the process for carry trade? Pretty simple. Like I'm not gonna even make it. Just think about it, right? Borrow funds at a low price, right? Convert and invest. Hold the position, close the trade, boom, profit. So the example in practice. So here's like a classic yen carry example. You borrow, or a bank or a hedge fund, whatever, borrows JPY, which is the yen, right? Japanese yen at near zero historically, right? Then they convert to like, the Australian dollar or US dollar. And then they invest in, for example, AUD bonds, which is the Australian dollar bonds, which yields 4 to 5%. Then they earn that 4 to 5% minus financing costs. So if the yen weakens against the AUD or USD, you also profit on the FX move when converting back. So you're getting the yield and you're getting the Japanese yen. So let me just pull up the Japanese yen chart. Let's do US dollar to Japanese yen. Let's just go to a monthly time frame. So this is what Like this is what you want, right? Like if you're borrowing, I don't know why I have trouble saying it. If you're borrowing money
That Minnesota
from
accent.
Japan, you want this, right? You want historically, and this is going all the way back to the 70s, right? This is what you want to happen. You want to borrow money, have the currency devalue. Borrow the money, have the currency devalue. Borrow, so on and so forth. And this is what's got people spooked, right? It's doing, I mean, just think of it about it from just a market structure standpoint, right? Like there was the break. There was the Adam and Eve, right? Boom, 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 boom. Now, holy shit, ain't as cheap as it used to be. It's going in the wrong direction. So what happens if I commit a carry trade? Let me get rid of all my scribbles. If I committed a carry trade here, thinking that, well, it's just going to keep devaluing, right? And then all of a sudden now it's going up. I'm starting to worry, right? That my buyback cost, I have to pay the loan back, is going to be higher. Does that make sense?
Yes.
Yep, like shorting the low.
Yep. That's exactly what it is. Yeah, 100%. So carry trades rely on certain conditions, staying stable, right? So two big risks. One is kind of what we just talked about. So it's exchange rate risk. So if the funding currency strengthens sharply, like if the yen's doing what it's doing lately, which is why everyone's talking about it, the FX losses just wipes out your gains, right? I mean, this thing's up what? I mean, since down here, it's up 100% since since COVID, right? Since 2021, it's up 50%, 44% since COVID. Not great, right? And then rapid unwinding. This is the real scare, right? So when that happens, but when volatility rises or risk sentiment flips, well, what do you do? What do you do when all of a sudden the market flips? So you're in a short and it starts going against you. What do? You close it, right? Yeah, you're closing it. You're buying your position back. If you're short, it's a long. If you're long, it's a short. And this can cause sudden currency moves, right? Like the yen rallying, which is what we're seeing happen right now. So it's like a perfect storm if Japan keeps doing what they're doing, which is raising interest rates. So I guess to summarize, let's just summarize this in plain English. Borrow cheap, invest in higher yield, pocket the difference, right? Works best in stable risk on markets, and can suddenly reverse in market stress. And I think that's like just the simple explanation. Why Japan matters specifically, I think we need to understand this. It's just because of this. I mean, it's this, right? It's decades. This is going back to 1971 of low interest and just a currency that has been devaluing. It's just the perfect zero interest. It hasn't been low interest. It's been like near zero interest for decades, as well as the currency devaluing, as well as a pretty stable country, right? Like you look at I don't even know if there's a chart for the Zimbabwean dollar, but we all know they have like $1 trillion notes, right? That's not a stable country to invest in. Like this is like Japan's perfect conditions because it's a stable country, the currency is going down, and near zero rates. Does that make sense too? Where Zimbabwe, not a super stable country, hyper inflation, right, and hyper currency devaluation.
Anybody know why Japan is one of the most stable countries?
Yeah, also the government is normal, everything functions, high developed technology.
The Bushido Code.
They don't allow any
But they
immigration.
have a problem with population. I mean, the whole world.
They're all samurais, dude. Why, Dunk? Could I answer the
Because
question?
immigration's stable.
When should you worry
Am I muted?
about?
Just making sure I'm not
No,
muted.
I heard you.
Okay. All right. Cool.
Why should we actually when? Well, when and why should we worry, right? I think is everyone kind of on the same page? We understand carry trade. We don't really speak about that. We're borrowing cheap. We're investing in another country. It works when the chart is going down as opposed to up. Everyone kind of on the same page there. We can kind of move on.
Can I ask a quick question?
Yeah.
Yep.
Whenever the unwinding happens and people are paying it back, is it like, are you borrowing at a fixed interest rate, or is the panic selling happen because when they raise interest rates, they know that the strength of the yen will go up, so the value will strengthen, so they're losing it against their value or against their investment, or does the panic selling happen because they are on a variable interest rate?
Are you in a spot where you can look that up? Because I don't know the answer to that.
Okay.
I assume, like my assumption is that it's a stable interest rate, right? My assumption is that they're freaking out because they're raising interest rates, which are making people, borrow less, close positions, and then that's making the value of their currency rise, which makes buying back cheaper. But I don't know that to be a fact. Well, I know the latter part of that to be a fact, but I don't know if like
Right.
what do they call it? Like an ARM loan, adjustable rate mortgage. I don't, I doubt I don't see Japan having those. It's got to be if you're borrowing at 0.25% or whatever it is, near zero in Japan, it's got to stay that. I don't know though.
Yeah, I would think that's not variable.
With the
So
sorry.
so we capitalize on that by buying, let's say, stocks that are in Japan and will valuate more versus dollar if the uptrend continues.
Oh, they are variable. So interest rates in Japan for carry trades are variable, and they are subject to change based on monetary policy decisions by the Bank of Japan. Well, Japan has a history of maintaining ultra low interest rates for extended periods. These rates are not permanently fixed and do change over time. So it's like the perfect unwinding, right? If you're holding, and I guess this makes sense why people are worried, right? So if you're near zero and all of a sudden now you're at 0.75 and they're going to go up and up, just the highest level in 30 years right now, you're worried, right? You're worried for two reasons. Number one, your rates going up because they are adjustable, they are variable, and then number three or two, whatever the hell number I'm on, the currency is going up.
It's double whammy.
That was, yeah, it's a double whammy. So that was a good question, dude.
I have a question too.
Then hold on. I think I park your question for a second, Caden. I think I cut Mitch off. Mitch, what was your question?
So how do we capitalize on if the yen will go stronger in the next, let's say, a decade, to buy stocks that are in Japan and they will up versus the dollar?
I don't know that we look at this as a how do we capitalize thing unless you're like a forex trader. I think we look at this as this could create ripples through the entire economy, and it's more of a risk on, risk off thing.
That was my question too.
Sorry.
That's
Yeah, I just wanted to say just by looking at the chart, the pattern is a bull flag and the time frame is monthly or yearly. So the trend could continue for a while.
Yeah. And that's the worry. That's the worry.
Yeah, but how
And
to
then,
capitalize?
well, we would be shorting the shit out of the markets, right? So if people are having to cover, right? If people are having to cover their carry trades because the currency is going up, because interest rates are going up in Japan, that means they're pulling money out of where?
the US.
The rest of the world. It ain't just the US.
So one of the things I thought I potentially would have to do this solo tonight because Ben's got that issue out in Minneapolis right now. So one of the things I prepped tonight was the carry trade industry as a whole is the largest leveraged market in the world. It has the most institutions, the most leverage, and the most money out of any other sector in the world. Right.
That was my
So,
question exactly.
and that's why I just kind of butt in there as that ended. So the carry trade issue
hold
is,
on.
where is the global leverage hiding?
It's like, let's just put it in perspective that it's a crazy amount bigger. Like it's fucking
trillion.
Yeah, it's crazy amount bigger, the forex markets.
Yep.
That's what I was gonna ask, is like the feeding off of what Mitch was saying, is like, how do we capitalize on it? It's, if I'm right, it's more of like understanding of global, like the economy, because would I be wrong to say like these institutions aren't positioned within like the last year, 2 years? Like we're talking about positions from 20 years ago, like positioned over decades.
So,
yes, exactly.
outstanding cross-border Japanese XF liabilities has been well over $3 trillion for many years, right? And the issue with this is you can't instantly close positions, right? When you deal with the FX market, you are stuck in waiting games, in closing periods, and financial like waiting terms that are through cross-border issues, right? So just for example, this is not a real one, but just say you have a 3-day close in the United States, Japan has a 7-day close here, it moves through Turkey, it's 11-day close there. You can't just close out the position. So the risk is the liquidation cascade, right? And to answer your question, where most people try to profit from this is, we're not big enough traders to have some kind of carry trade, right? Where we go is US JPY, Japanese bond yields, risk on correlated spikes. So Japanese stocks or things in the US that are, dependent on things happening in Japan, or sudden strength in the yen, right? Those kinds of things.
Yep, 100. Yeah, Donkey's 100%. But I think also like Hayden and Donkey are both alluding to, like, this isn't like all these people had positions that were opened up yesterday. These are like yearly, 5-year, 10-year positions that have been built up and up and up and up. And if and as this unwinds, money's going to be pulled out of the entire world, because it's not just the US that they're investing in. If this like spirals out of control and we get into liquidation events like Donkey was talking about, which is a very real possibility, if it keeps going up, it's going to happen, right? The stock market's going to crash.
Yeah, because the bigger issue, like you just said, with this crashing is those big institutions will be forced to sell everything at the same time to cover liability, right? So forced selling, uncontrolled liquidations, and chain reactions would be real, right? So this is why the BOJ or the Bank of Japan moves very, very slowly and is extremely cautious when making these changes. They don't want to make any sudden moves to shock the system. They don't want to have any sharp risk off moments or fast reversals, or they just try to minimize volatility. But every time they move, there's panic in the market just because they are in fact moving.
Yeah, I'm glad you touched on that. That's kind of where my mind was shifted, and kind of wanted to touch on that exact subject. That was great.
So would that explain why everybody wants to print money? Like they say, like the government might print or inject more money into the market. Is that to help cover the potential collapse of the carry trade?
Wouldn't it need to be like an absurd amount of liquidity though to be able to cover those
Yeah,
liquidations,
I
right?
don't
Like
know if
yeah,
printing money is a way out of this, because you'd
yeah,
have to pass it
exactly.
out. Like, so it could be printed in a form of bailout, right? But it's not like they just print money and say, hey, look, just throw this into the system, fix it. They would have to let people fail and then bail them out.
Yeah, just to put it in perspective, it's the FX market is so massive that it's trillions a day being traded and thrown around. It dwarfs equities. It's it's like altcoins don't even exist. That's how big the forex market is.
Yeah, and that's why, and just to put perspective on how people like physically day traders trade it, or intraday traders trade it, they use 200 to 500x leverage because the liquidity is so thick in the market that you can take such high leverage plays for 0.1 pip or 0.1% moves for profit, right? At a 2 to 500x x level. That's how smooth that liquidity moves. Those high leverages were never designed for crypto. They were never designed for the stock market. They came out of the FX market and got inherited into these new markets as straight dangerous.
Yeah. So Donkey's right. So this is this goes back to what we were saying about like without forex, there'd probably be no modern day crypto trading. Most retail forex brokers commonly offer. So in the U.S., it's regulated, right? It's 50 to 1. That's the most common offer. But a lot of these forex traders in the US do what we do, and they trade on offshore brokers. 100 to 1, 200 to 1, 400 to 1. 500 to 1 is one of the most common offshore leverage. I guess I'm just most of them blow up, right? Like it's this trading forex isn't like a cheat code, right? I don't want it to sound like it is. It's the same, right? It's still 95% of people fail. It's still strategy. It's all that's where SMC and ICT came from. That's where a lot of the buzzwords you hear thrown around came from, was from forex. But it's very similar to trading shitcoins, man. It is. Or crypto in general. Maybe not so much Bitcoin. I guess, yeah, probably Bitcoin for most people.
Yeah, when I dived into that world, I got overwhelmed very quickly. Years ago. So much.
Chart is a chart. Candles are candles, right?
Yeah, 100%. But with Donkey, it's not as like crazy. Like even like look, why do I like Bitcoin? It's like Caden said on live last night. Like Bitcoin can sweep a weekly high by 5%, like, and then the same day go for the low, right? Like it moves. Percentage wise, it moves. It's I don't want to say it's easy to capitalize on it, but it's volatile. You know, you look at like NQ today, we swept a weekly high, and then we came back to VWAP, and it was a 0.3% move, right? They're even less a lot of times in forex. That's kind of what Donkey was saying.
Yes, you need those higher leverages. It's just moves smoother and slower. So hopping in on those super high leverage trades, while still just as dangerous, right? You know, it's commonly used because of the lower volatility in the market.
So when I think, all right, everyone good there? We all on the same page?
Yep.
Yeah,
right.
that was a good conversation.
Yep. So when should we actually worry about the Japan carry trade? And I think this is the part that most people care about, right? So here's the warning signals to track. So there's the macro signals, which is here, I'm just going to paste these on my screen. So macro signals right there. The Bank of Japan hinting at policy normalization, right? Which they've been doing for a while now, and now they're actually raising. Just adjustments, right? Inflation that sticks, which is why they're doing the top two things, right? So they're having sticky inflation. Inflation is rising, which is why they're having to raise interest rates, right? As well as wage growth in Japan. So that's like warning signals to track from a macro standpoint. Now we have market signals, right? So there's macro, and then there's the actual market signals, which is sudden yen strength, which we're seeing, right? Especially against the USD. USD failing to make, well, it'd be reversed actually on the chart, right? So I guess I'm on the chart. No. So USD to JPY failing to make higher highs, but JPY to USD making higher highs. Does that make sense? I'm phrasing that. The chart we looked at, it was making higher highs, which is what you don't want to see because it was JPY to USD, not USD to JPY. Everyone with me there?
The yen is appreciating quicker than the dollar, pretty much, right?
Yes. Yeah. Correlation between yen strength and equity weakness. So yen's going up, equities are sideways or down. Volatility, basically indices rising while carry trades still look crowded, meaning there's still a lot of money out there, right? Which there is right now. So a lot of these things are happening right now. That's why people are freaking out, right? So they're raising rates. They got sticky inflation. There's wage growth in Japan, sudden yen strength. We're making higher highs where we shouldn't be making higher highs. Japan's getting the Japanese yen's getting stronger, right? So
Yeah,
all
and,
these
and
things are happening.
that's a feature, right? Not a bug.
Godzilla is coming.
So
Would you
Yeah,
say
so a weakened yen is a feature, not a bug, right? So this boosts Japanese exports, right? It raises foreign earnings when converting it back to yen, improves trade competitiveness, and supports corporate profits and tax revenues. So Japan is also profiting off of this. This is why they've been so slow to change it, because it's one of the best things for their country is to be the world bank. Like yen is lended out cheaply. You know, other FX risks, duration risk, equity risk. Japan sits at the center of all this funding, right?
when you say wage growth, is that just like raising the hourly wages? Because how is Japan's population just not suffering over the past 70 years or however long it's been depreciating so much? Like, where are they keeping their money for them to actually generate and keep their wealth, if that makes sense? If their
Let's
currency is
let's
devaluing.
circle back on that one because that's a good question. Let me finish this, then we'll go. Then I want you to ask that question again. So don't forget the question. Write it down.
Okay.
The last part of this is just positioning, right? So it's macro, it's like market signals, and then it's positioning. Now here's how I look at positioning, right? Overcrowded consensus trades, right? Everyone's saying Japan will never hike. Narrative certainty. This is an SFP trade for me, right? That's what this is. When everyone thinks something's going to happen, it doesn't happen. When everyone thinks it's a breakout, guess what? We're not breaking out. When offside traders pile in, guess what? I'm taking the opposite position. So that's what I mean here. So overcrowded consensus trades. What does that mean? The same positioning, right? Everyone's been positioned the same in Japan for decades in the same direction with the same assumptions, with the same risk model, with the same exits, right? And when that's held by too many participants at once, often with crazy freaking leverage, what's the recipe, right? The recipe is for disaster. Does that make sense? And how I kind of like equated that to like an SFP trade?
Yes.
Okay. So when a trade is overcrowded, upside becomes what? If everyone's thinking long, upside becomes limited, right? Just how we trade every day. Downside becomes like just non-linear, right? Liquidity disappears when you need it most. It works until everyone tries to leave. And that's what Dunkey was talking about with like liquidation cascades and how this thing could really, really blow up. And then everyone's saying Japan will never hike, right? It does not mean this is like it doesn't mean that people literally say it, right? But it means portfolios are built as if it's impossible. Does that make sense? Like everyone wasn't saying Japan will never hike so much with their words as they were with their positioning.
Yes, that makes sense.
Okay. And this is my favorite one, dude. Narrative certainty is my favorite one, especially having been through a couple bear and bull markets now. Narrative certainty is when like a story becomes accepted as fact, right? Bitcoin will in 2021, all the influencers were saying Bitcoin will be 100K by the end of the year. It was certain, right? A story becomes accepted as fact. Alternatives stop being discussed. Risk is literally dismissed instead of measured, right? What do markets hate?
uncertainty.
Markets hate, well,
Unbalanced.
yes, but in this the markets really hate certainty, right? When everyone thinks something's going to happen, usually the opposite happens. I mean, that's retail trading 101, right? When I used to show the CVDs of ranges that we'd be in, we'd look and see that retail sells bottoms and buys tops, right? Because they're certain we're going to go down, or they're certain we're going to go up at the top. Does that make sense?
Or they hear it in the news.
Right, right. When everybody agrees, right? There's no incremental buyers left. Everyone's already fucking piled in, right? There's no more buffer for surprise. Even small changes can cause violent reactions.
Yeah. And
Now,
go ahead.
go ahead.
So I was just going to kind of move into his question a little bit, right? So what does this actually do to the people of Japan? Well, it creates stability, first of all, but that stability comes with sacrifice, right? There's no boom, like bust eras or generations in Japan like you have with the United States. There's no tech bubble. There's no crypto bubble. There's no bubble issues, right? So there's no wages are more evenly distributed, right? And there's a trade-off to that. So the economy in Japan just kind of moves sideways, right? It avoids inflation. It avoids increase in wages because nothing really changes cost over there, right? There's no mass unemployment. There's no avoiding. There's no housing collapses to avoid. There's no debt crisis for the local economies. There's no issues with the society being uncohesive and things like that based on wage earning. It's all kind of even, and it gives them great healthcare. It gives them, great food quality. It gives them great government systems. All those things, but the trade off is the dream of being the American millionaire or the person who drives the nicest car. Like there's no rat race, right? And some people live. Humans are competitive by nature. The rat race is what drives a lot of people at the end of the day. So there's no labor shortage. There's no political pressures over there. There's no issues like that. But what does that create? It creates um, an economy where you have to work for corporate Japan. You have to work for Toyota. You have to work for Sony. Just like in China, growing up and working for Samsung is the dream of many people because it provides a quality of life that's stable at the end of the day. So the issue now is what's changing that all? COVID's fucked it all up, right? The import inflation is becoming an issue in Japan like it's never become before. And the other big thing, which Elon Musk talks about on a global scale, is there's labor shortages over there now, right? The population is dying off because of one of the issues I noted earlier of why they're so stable. Generally, is they don't allow immigration into the country at all. It's all naturalized citizens almost everywhere. To move to Japan and not be Japanese is a 10-year process, and they don't let you just come into the country. So the reason they're looking at inflating the BOJ is looking at increasing rates is because they have to fix the inflation issue. It's a growing issue that's been growing and growing and growing, and now even more so because of the COVID issues nationwide in the labor chain, right? And then the labor shortage is the other big one.
Yep. I also think we live, Caden, in a very unique economy. And I think we're a little Americans and we're a little blinded by that to the rest of the world. So like a weak yen is not like, it's not automatically bad for China. As a matter of fact, like, a lot of our current and past presidents have argued that China is intentionally debasing their currency, right? So it's not like automatically bad. I think that's like a mistake. And like, it's just because we're so used to how our economy works. Japan's different. They're not like consumption driven like us, right? They're not in. So the US is an import dependent economy, right? That's the US. We are dependent on imports. Japan is an export powerhouse.
Yep.
They
Both
make
money through banks and product.
yeah, product. I mean, think of PlayStation, all the Japanese cars on the road. A weaker yen right, actually makes Japanese exports cheaper globally. It boosts corporate profits for exporters. It increases foreign demand for Japanese goods. So because their yen is weak, it can actually benefit them in ways. And this is why a lot of people say we're losing the battle to China, because they're intentionally debasing their currency for these very reasons. But also it lifts equity prices and people's balance sheets as a result. And that's why, I mean, at the end of the day, like those reasons and what Donkey said is why Japan has tolerated yen weakness for so long, because it's fucking working for them.
Yeah.
And it's just a
And
different economy. It's not
you-
better
there's
or
some new
worse, you know,
trading.
at the end of the day, it's just different.
Yeah. It's a whole different animal. It's just that they look for stability and quality of life over there. They don't look for the rat race, which is super interesting to me nonetheless. There's a trend right now on TikTok where you can quite literally fly your family of 6 to Japan Disney World and save 30% over flying your family down to Florida and doing the same thing and have a better quality meal out there. You know how crazy that is?
And they also have like literally a persistent trade surplus, like year after year, right? They export high quality goods too. It's not shit that they're exporting, right? Automobiles, machinery, robotics, electronics, and they
Engines.
have
They're one of the largest engine
yeah.
providers in the world for everything: 2 strokes, 3 strokes, 4 strokes, automobiles, lawnmowers, right? Anything that takes an engine.
And look, when you have like near zero interest rates, I mean, imagine if we had zero interest rates here. Like, think about what that would mean for us, right? It would keep debt service cheap as hell, right? It would prevent forced deleveraging. It buys time instead of solving problems. And I think Japan has mastered that. Kind of coming to a head now, but
Well, Japan actually
So
has the highest savings rate on
yes, yep.
any industrialized country, like by
Yep.
not a small
It's
margin
stable.
either.
Yeah, they're not they're not like us. Like we get a paycheck and we fucking spend it
Yeah,
all.
we
We buy a
spend
bunch of shit that we don't need.
Yes.
Right? They're not going out and buying a freaking $8 Starbucks coffee every single morning, right? They're making it at their house. Yes, that's true, Rich. 100%. They
Yeah.
do have like one of the highest savings rates of anyone in the world.
Yep.
Pretty crazy.
So that kind of helped Caden a little bit. Or
Yeah,
Mitch, who
no,
asked the question?
you guys killed that. That was great. Great question. Or, jeez, great answers.
So
Donkey,
double-edged
when you're
sword.
saying-
What's up?
So when you're saying like they don't have a rat race, you mean in terms of constantly trying to get ahead? Because they do have like a crazy work culture, right? Where like loyalty is valued and they work like 12 hours a day, right? So
Yeah. So there's no political poisons over there, right? There's no culture of this is owed to me. There's no culture of I'm going to stick it to the man. There's no culture of um on the
It's
reverse
all
side of that too. There's no culture of I'm going to have the best yard on the block. There's no culture of I'm going to have the most expensive car in the drive. Okay, it probably exists, but a very small amount. That I'm going to have the best
right,
car in the
right.
driveway. That I'm going to have like the biggest house on the block. Those kinds of things are culturally, for the most part, irrelevant in Japan. Their
It's all
dream
one
is to be
culture, it sounds
stable. Yeah.
rather than
The result is they help their neighbor. They support each other. They like it sounds weird to say out loud. Like we do this at a very good job on the local level, right? You know, in my neighborhood, we're all friends. If somebody needs something, they simply throw a text out and we go out and help each other. That works on a national scale on Japan very well. That kind of makes sense.
yes. It's tribalistic. It's just like ancient times, right? It's your tribe.
It's very
And
similar
if
to that. Yep.
So we did fill a whole hour with carry trade. I think it was,
It was
a pretty
fun.
cool conversation.
Yeah.
So let's I'll open it if anyone has any questions at the end. That's cool. It's about this or anything else, but this was not a lesson about Right. I mean, it kind of went into a little bit of a lesson about Japan, but this was a lesson about like leverage, certainty, and hidden risk, right? Japan's just kind of the mirror, right?
The transaction
carry,
holders.
the carry trade is what happens when the world borrows stability, because that's what they're doing. They're borrowing stability from one country and they're spending it elsewhere. And Japan has been that stability for decades. Now, when people ask what happens if the carry trade unwinds, I think the
It's
better
over
question
for
is
Japan.
who has been living off of it, right? And this reframes everything: equities, crypto, FX, risk appetite, volatility. None of that shit exists in isolation, right? So our job is not to, it's just like the markets, right? Our job's not to predict Japan. We don't know what's going to happen in Japan. We don't know if it's going to blow up. Our job is to recognize when stability is being withdrawn, which is kind of what's happening right now, right? Um, Three main things to watch with this, I think, is just yen behavior, not headlines, right? Just like the charts, like show me the chart and I'll show you the news, right? So watch the yen behavior. If you see fast strengthening, that matters more than any policy statement by the Bank of Japan, the United States, or anyone else, right? The charts are what matter. And then volatility, right? If volatility rises while the narrative around the carry trade stays confident, something is probably wrong. And then just watch liquidity reactions. So when levels fell fast, it is positioning, not TA. And I think that kind of fits like what I harp, like how I trade. Like I think about it again, bringing it back to like SFPs and liquidity frameworks and forced liquidations and trap traders. I mean, that's essentially what this is. It's just a giant SFP. It's just a bunch of trap traders at the end of the day. And markets, you got to remember, markets don't break because of news, man. They break because too many people believe nothing would change.
Yeah. And they're trapped. Like, it's not like, oh, they entered and then they're trapped. They've been trapped for years. So if that system goes down, they're going down. There's no way to get out in a manner that is undamaging. All of it.
Japan, go ahead.
Not all of it out. It's a slow process to unwind that liquidity.
Yeah, Japan's been carrying literally the world on its back for 30 years. And the question is not like whether it can keep doing it. The question just comes down to who falls when it does not, right?
Yeah.
Mm-hmm.
And maybe it goes for another 30 years. And then every half a decade, we get a threat like we're getting now. And maybe it never breaks, right? But it's, I mean, just like they say in traditional markets, it's a dam, right? And it's getting high and the dam is weakening. The question is how long can the dam hold?
Just go look at 2008. Go look at the JPY USD. Look what happened. And we all know what happened with the economy.
Yep.
They believe it or not, like most crashes, like global financial crisis, have some like there's basically a carry trade involved usually, and like there's like records of it that like the 2008 wasn't just because of the credit crisis or a credit crunch. There was partial because there was a huge unwind in the Japan carry trade, and people were getting caught.
And exposed risk in other areas because of that.
Yep.
It's kind of scary at the end of the day, but what will actually happen is unknown.
It's part of being a risk manager, though. You got to understand the risk.
Yep,
yeah,
that's why we have this
100%. And this is understanding the risk, right? Cool. Good combo tonight. Anyone have any questions on this or anything else before we get out of here?
Actually, Ben,
Yeah, what?
I have a question, if you don't mind.
Mm-hmm.
So, like today, like we were watching New York, and we were watching for the weekly low, and the weekly low hit, and I think a bunch of us took it. I remember you saying, I don't want to take it. And you didn't take it. I think a bunch of us did. And For me, at least, it worked out in a small loss. But I'm just curious because it was like an A+ setup on paper. But you said I don't feel good about it. I'm just curious about the psychology. What
Sure.
you were thinking
So
at the time.
I think everyone in here knows that A+ trades can fail. Right? Let's just put that out there first. Does everyone agree with me? You can have the most beautiful fucking setup that you've ever seen in your life, and it can fail.
Yep.
Nothing is certain, right? Nothing is guaranteed in these markets. So I know that, right? I know that A+ trades can fail. Price to me today just looked heavy. Why? Why did price look heavy? Right? Zoom out. What did we do on Monday? We swept the whole range and took liquidity, right? I said, like, I think Dunky and I both said early on before the market even opened, well, probably top of the range, bottom of the range. Does anyone remember me saying that?
Yep. Yeah, we even argued about it.
Yep.
Not argued, but we expanded the conversation.
So I think, I don't know that my brain, like, I think subconsciously, and I was having a conversation with Nate about this before everyone hopped in here. I think, like, subconsciously, because I wasn't like consciously thinking this, but I think subconsciously I just wanted to be in a short, man. I think I just didn't feel good about longs, given structure, given that we just swept the high of the range. I don't have a good answer for you, man. I call it intuition, call it years of staring at the charts. I wish I had like a solid answer for you. I just didn't feel good about it. Something was like, if I feel iffy about a trade, it's safer just to not take the trade. If I have like a shadow of a doubt about a trade, I'm a risk manager. I'm just not going to take the trade. I'll miss it. I don't care. And that's kind of what it was for me today.
Yeah, I guess that's kind of like the juju because it was on paper like a great trade. But I remember hearing you say, "No, I don't like it." But my rules said take it, so I took it.
Well, I think that, I mean, so did a lot of people, right? Bobby took it, Nate took it. I think a lot of people in here took it. I'm not calling anyone out, but you learn from it, right? That's the only way you're going to get better. And if it is juju, and I'm not calling it juju, but maybe it is juju, right? Maybe it is intuition or something. Maybe it's some kind of subconscious programming that's been wired into me from just staring at these things all the time. Like, the only way you're going to get that juju or that subconscious little part of your brain who's like, hey, maybe not don't take that, right? Is by dissecting it, everything that happened, right? Open up the week, swept the whole range, we dumped, we trapped it wasn't a normal amount of traders, right? There was a shitload of offside traders there. I don't know if there's something to that or not. Maybe there is. Maybe the sell pressure was just so strong. All right, I'm not saying that's the answer here. I'm just saying it's something to note, to write down, to pay attention to for future scenarios. And then guess what? If you start to notice these things, right, where, well, this is like 4x or 10x the amount of trap traders we usually have on a 15-minute chart on an SFP, and then you notice that again and again, and pretty soon you know not to take those. I'm not saying that's what happened here. What I am saying is dissect the data, write it down, study it so it doesn't happen again. But I'm also saying, all right, going back to what I said at the beginning, I don't fault anybody for taking that trade because it was a perfect fucking trade, right? This could just be one of those scenarios where every once in a while an A+ trade just fails, right? It also might just be the market doing what the market does.
Yeah. Yep.
Yeah, and to be clear, it didn't go. It went another $400 lower than the weekly. It wasn't huge, and we're back above it now. Not saying we won't come back down. For me, I was watching that 4-hour low that was a little bit low the weekly, the 4-hour structure shift. So I was zoomed into it a little bit.
Go ahead. Sorry.
No, you're good. That's all I have.
I was gonna say, just referring to like Rich, like you mentioned, it's like it's just experience, it's juju. I agree. When he sees his SFP candle wiggle, that shit's juju. I back tested your entry yesterday. That's insane that you could see that shit. Um, But something that's helped me like a lot
But you can't
is
see that shit on replays.
exactly. I tried. I was thinking about that today. I was like, I was going back and I was trying to look at it. And yeah, you can't. It's crazy. But
Well, it's just because it's happening in real time. Like maybe if you looked at like the 1 second chart, you could see the wiggle, but it's happening like it's just bouncing,
yes,
right? Like a bobber when you're fishing, right?
yeah, you saw the handshake and that's what you say.
Yeah.
You saw the handshake and the switch in positions, which is
And I even
it's
saw that
amazing.
today. And I still didn't take it.
I was gonna say, Rich, something that really helped me is like I think it's just context at the end of the day. It's like he even said it. He's like, I saw we swept the entire range high Monday. I mean, what's in my what are the highest probabilities if we sweep a high and close back into range? I mean, POC then
Low.
range low.
Yep.
So it's like, yeah. That's something that's helped me is like I have it on my monitor. I'm always asking now is like, where are we trading away from? What are we trading away from? What are we trading away from? And it's really helping me with like context, especially.
Yeah, price just looked heavy, right? Like it just looks like we're coming down. And maybe we don't. I don't know. I don't have a crystal ball, right? All I know is what has happened, which is we swept the range high, we SFP'd it, and we're coming down. So what happens when market structure shifts from higher high, just simple stuff, right? Higher highs and higher lows, right? What ultimately do you want to be positioned when we're doing that?
Long.
So what happens when that shifts, right? Where did it shift? Right here.
Yep.
That's where the shift happened, right? That's the impulse low, right? That's where the break happens. Now we're in a downtrend. What do you ultimately want to be positioned?
Short.
Short. Does that mean you can't scalp longs? I'm not saying that, right? But they gotta, and it was an A+ trade, right? They gotta be A+ trades. If you took it, hopefully you didn't lose more than 1%. And this just might be one of those oddballs, man. It just might be one of those.
Yeah. I mean, it was like $27. It was nothing, but
Yeah,
I
it's
think
just might be. We could probably see the same fucking trade tomorrow, and it works out perfectly, right?
That's yeah. I almost feel like I'm like too one-dimensional right now with my strategy. It's like I see it, I take it, but like you said today, it's like I'm not feeling it, and that's what I feel I'm missing. I don't know.
Yeah, and I don't think that's the wrong way to be. So, what did I say to Mitch? Where was that, Mitch? Where I responded to you? Was that in the TA questions? Okay, so Mitch asked a good question, right? So he asked a question about diagonals and support and resistance plays. He says, do you go by second touch establishes the trend? Which I mean, yeah, right. A trend starts with 2 touches. You know, you draw the diagonal and the third touch is the entry, right? So I tried to reframe that question, right? I tried to get him to think a little bit differently. I think the entry goes where the market confirms your idea, right? And I think that's the only correct answer here. You need an idea, which you had, right? Which is we're going to sweep the weekly low, trap trade, whatever your idea is, right? So you need to define the idea first. And then you need to define what your confirmation looks like. Trap traders, you know, support bounces with divergences, whatever that is. Then you trade that, right? Every single time it appears in the markets. So you did that, right? And then you tune it with losses and wins. And 100 trades, 1,000 trades, or however many it takes. That's how that's how you earn your edge, right? You don't find an edge. You earn it by taking that setup every single time it appears, no matter if you win or if you lose. And then you're just tuning and adjusting, right? So, well, I noticed that SFPs that only go $10 or $20 above the higher low fail more often than they don't, right? And I noticed that when they go $200 to $300, they're more solid. I noticed that when there's a little bit of trap traders, it doesn't go. I noticed this and I noticed that. And you start tuning your strategy. So this is also why you shouldn't use a lot of money to trade when you're earning an edge, because you're not there yet, right?
Yep. Yeah.
So if you took the trade today, it's just a lesson in the market. And I don't know that there's a great lesson today. There's a great lesson if this happens multiple times and you notice it. Then it becomes a good lesson. If you notice this exact same scenario, right? Have a playbook that's separate from your journal. Have it be, you know, an SFP playbook or a bounce or whatever kind of trader you are. Just simple notes. We swept the range. We swept the weekly. We swept the range on Monday. Swept the weekly low. Tons of trap traders. We were in a downtrend. Just write down what happened.
Yep.
Right, and then every once in a while, flip through it. When something weird throws you off like this, that's how you're going to get better.
Yeah, yeah. I actually wrote in my journal, like if you look at your chart, everything's going down, right? It's a downtrend at a micro level. So yeah, I wrote in my journal, it's like I almost felt like it was a counter trend trade.
Also, you're not gonna learn. You're not gonna get that that juju or that vibe that Ben's talking about, that instinct, without actually experiencing the markets. That comes from experience. That comes from his subconscious telling him, "Hey, we've been here before, and this didn't feel right before, and it didn't play out."
Yeah.
Yeah,
Like,
but
that's
you're
what
also, yes, you're 100% right. But you're also not going to get that juju by focusing on multiple things. If you're trying to learn bounce breaks and SFPs, your mental capital is spent, right? It's going in 3 different directions. It's going to be hard to parse through data. It's going to be hard to whittle your edge when you're focused on so many different things. I'm not saying everyone in here is doing that. I'm just saying, like, you're going to get juju by hyper focusing on something.
Right.
We should call it something besides juju, because juju only has bad connotation. There's no good juju. There's only bad juju.
Juju's like voodoo, dude. I'm a voodoo priestess. I don't know what you're talking about.
Jeez.
Fun fact: do you know where the word juju came from? I'm just kidding.
Yeah,
but yeah, it's only a negative thing.
Yeah, thank you guys. Appreciate it.
Fun fact.
It's a West African spiritual tradition, meaning bad luck or negative energy. Just the term juju.
Yeah, well, whatever. Don't be a little bitch, dude.
Oh,
I'm not.
crazy.
It's funny. There's a story behind how I know that. I bought my first motorcycle, and I pulled it out of the dealership, out of the garage, and went to start it up. And the $650 helmet I bought with it, I sat on the seat, and I bent over to adjust something on my pant leg, and I knocked my helmet over off the thing and fucked it up pretty bad in the visor. And the dealer, a West African guy in the dealership goes, "Oh, the juju's all out. You're safe now."
Hey, Rich, do you still have that folder I sent you in the drive? In our DMs, probably?
Yeah, I do.
Can you just toss it in there whenever? It doesn't have to be tonight. I'm not going to upload it tonight anyways.
Cool. Yeah, good.
I'll upload it in the morning. All right, guys. Anyone got anything else?
Appreciate
Yeah,
it.
what?
Thanks,
Off topic, but what's happening in where you're at?
I don't want this to turn into a political conversation, and I'm going to tell you why. I'll tell you what's happening here. I'm fucking mentally spent on all this shit. Like, I really, really am mentally spent on all this shit. What happened today? Here's the facts. Somebody, ICE shot a lady. What the lady was doing and all the blah, blah, blahs and back and forth and right and left spinning it in their directions, I don't know. But here's what I know is Minneapolis is probably going to fucking burn to the ground. If not tonight, then by this weekend. They're already out there protesting right now.
Oh, I see. All right.
I seen they kicked the fucking doors in at City Hall or something.
At the federal, no, at the federal courthouse.
Man,
Oh my God,
all
that's
the
crazy.
child, what are they called? All the child care stuff going on.
Yeah,
Well,
I've,
oh my
I've,
God.
Dude, Minneapolis is always ground zero. This is where George Floyd was. You know, it's ground zero. Like every 4 years, they burn down the fucking city.
Yeah, and it's a whole different story when you got family in the mix, in the locations, and all that stuff.
Exactly.
That's what you got to remember.
Exactly.
Well, be
Thank
safe,
you guys.
Be safe.
Welcome,
right, y'all.
Parker
I'll
and
see you guys in the
Augusta.
morning.
Welcome to the group, guys.
All right, man. Don't be going downtown.
Yeah. Well, my daughter lives down there, so if shit pops off, I'm going to get her.
Let me know. I'll be on the road. I'll go with you.
Right on.